Good evening, friends. Hope you all are well and doing fine. I am Ashok Kanawala and I welcome you all to this webinar to discuss our NFO of HDFC MNC fund. Now, why this fund? We are today living in a VUCA world, volatile, uncertain, complex, and ambiguous. And when it comes to market, we have seen for last over 12 months volatility rising out of variety of reasons. 22 was like that, and probably 23 also gives the similar impressions. And when the things becomes volatile, uncertain, people tend to avoid investments. So we thought of this fund, which are a set of companies which have over the years created wealth for its investors, but at the same time are less volatile. Now, when it comes to multinational companies, people generally think that what are these kinds of companies? But let me tell you, when you will go through this presentation or webinar in detail, that these are very Indian companies. They have the presence globally, but have been part of Indian ecosystem for more than decades. And these are the products that we consume or use on a regular basis. So therefore, they are not new to India. They understand Indian economy as much as any other Indian company is concerned. And therefore, we thought of this fund at this junction. With me is my colleague Rahul Baijal, who is the fund manager for this fund, and who will help us understand this fund in a greater detail. Will explain us what multinational is all about, what are those kinds of companies, and why it makes sense to invest in this kind of companies or portfolio with a medium to long-term orientation. Also with me is my colleague Amay Devulkar, who is a product specialist for this fund. And post Rahul is done with his opening remark on this fund, he will be helping us moderate this call. So whatever be your questions, please post them and we'll help you get it resolved to your satisfaction. So without much ado, over to you, Rahul. Rahul, all distributors, investors on this call and wanting to hear your thoughts on this fund. Over to you.
So, so the plan today is to basically spend initially the next 20 minutes on taking you through some of the key questions which would come to the mind, and four key questions which come to my mind are, one, so what is this product all about? HDFC MNC fund. And what is the attractiveness of this product in terms of the various features, and then what kind of a portfolio strategy you will follow in this product, and lastly, so who should buy this product? What is the suitability of this product, and what kind of value addition will add to the client's portfolio. So I'll address these four questions in the next 20 minutes. फर्स्टली ये जो प्रोडक्ट है HDFC MNC फंड, जैसा कि द नाम एक्सप्लेन्स, इट्स वेरी सेल्फ एक्सप्लेनेटरी. इट इज अ thematic fund in the open-ended equity category, and it follows the MNC theme, and more than 80% of the fund would be invested in the MNC theme as per the definition. And as I go later in the presentation, then I'll come back to this topic and take you more through about the portfolio and the allocation you're planning over here. But this is just a brief introduction of what the product is all about. Now coming to the other three questions, why invest in MNCs? What kind of return profile is there? What kind of risk is there? So what's the strategy will follow, and what is the overall investable universe जो available है, to pick and choose stocks from out of the CNX 500 index and beyond. And lastly, as I said, so who should invest? What's the suitability? So firstly, on the attractiveness of this product, I think one word which comes to my mind when I look at this product and its performance in the past and the portfolio and the kind of companies, I think it's quality. And whichever way you look at it, whether it's the managements or the brands or the kind of superior technology behind those products and the brands and the balance sheets, especially the balance sheets, and I'll show you in detail. Quality is one word which is common across all these parameters, and which is why probably a combination of all these four gives you attractive returns in the past as well. So when it comes to quality, uh, quality in various parameters, whether it's corporate governance, trusted brands, and strong balance sheets, it also leads to a lot of longevity. And if you look at this particular table, you'll see companies, MNCs in India, like these 90-year-old, 70-year-old, 90-year-old. So the entire gamut of MNCs over here are ranging from 60 to 90-year-old. And in fact, the last company uh, whose cars all of us have bought at some point in time is actually one of the youngest MNCs to be there in the country. So one word again with quality, which is associated, is longevity. Longevity and duration of the life cycle of a company. So MNCs clearly stand out. And I think uh, 73 years down, 77 years down, when we touch the turn of the century, uh, I'm sure many of these companies will continue to survive, continue to thrive, and continue to do well. So I think longevity is one word I want you to remember when you look at these companies. Brands is something which we are very familiar with, जो हम weekly, monthly travel, shopping में experience करते हैं, whichever market we go to, whatever you buy, we come across all these brands, and these are brands which have been coming across generations. We heard it from our parents, and our children are hearing from us, and so the story of these brands will get passed on from one generation to the next. This is a very interesting slide in terms of quantifying what I just said. तो ये जो MNC companies होती हैं, इनके जो parents होते हैं, they spend a lot of time and efforts and money when it comes to R&D is concerned, and even advertising. So therefore, one unique advantage which the MNCs listed in India have is that they get the benefit of all this money and time spent by the parent, whether it comes to R&D in developing good products, superior products, or whether it's spending money on brand building. And these days, if you build brands anywhere globally, because of social media and real-time connectivity to the world, all that money spent abroad also has an impact on the subconscious and the conscious, of the consumers in India as well. So I think this is a clear advantage which MNCs have versus the homegrown players. The support which the parent has given directly and indirectly through the R&D spend and through advertising. And these are just two case studies we have shown. The company on the left is a consumer company, and company B is an engineering company. What about growth and profitability? Again, on that parameter, if you look, last 10 years, fantastic track record in terms of growth as well as profitability. In 7 out of 10 years, as you can see, the MNC index has grown faster than the broad-based Nifty 500 index. And if you look at a 10-year track record on the right, it's also higher on both sales growth as well as profitable growth. And while they are growing fast and in a profitable manner, the focus on balance sheet always stays. Again, look at the consistency in the balance sheet. हम कहते हैं कि high debt on the balance sheet is not good, and you can see how the focus on debt on balance sheets has come in the market with the recent episodes. Look at these companies; they always maintain a low leverage on the balance sheet consistently year after year. And why is this possible? Because they have a very good track record of generating free cash flows from the operating profits, which in our industry we measure by free cash flow to EBITDA percentage as to how much free cash flow is getting generating from the operating earnings. So again, look at the track record, very consistent. And because of this consistency in free cash flow generation and focus on balance sheet, they are able to maintain at very attractive ROC and ROE versus the broad-based universe. So this chart actually summarizes all the hard work and the good work in terms of growth and profitability done over the last decade, focus on working capital, capital efficiency, cash flows. And at the end of the day, when it comes to the final exam in our industry, what do we focus on? We focus on what is the ROC and what is the ROE. And you can see that they come at the top when it comes to comparing with the broad base benchmark. So I think high quality and very high longevity and consistency in cash flows are three common characteristics, of the MHCs in India. And if I look at the next decade, I think India is one of the few economies in the world which can keep growing at 5-6% compounding for the next 5-7 years. And when you look at India from the eyes of the foreign MNCs boards abroad, दुनिया में कुछ 5-6 countries हैं जिसमें you can see 5-6% kind of compounding, and most of these economies are in Asia, because East Europe is having problems of its own because of the war over there. South America, the emerging markets have had various issues regarding corporate governance, politics. So it's only these 5-6 economies in Asia and a few others in Southeast Asia plus India combined, which offer the world 5-6% kind of growth potential. And therefore, I'm very confident that the parents, the board will continue to invest in India over the next 5-7 years. And these are some news flow which you can see from the recent past, which is reinforcing this trend. Before I come to valuations, let me show you the attractiveness of this portfolio based on the past track record. So these are two kind of returns we have shown. If you look at the point-to-point performance in terms of the long-term returns, 10-year returns, 15-year returns, you'll find the Nifty MNC index has outperformed the Nifty 500 index meaningfully. And if you look at the daily rolling 5-year returns, which is another way to measure returns, and it's a more consistent way, because you're not taking point-to-point performance, but you are taking last 10 years, and on a 5-year rolling basis, you're calculating the returns. Again, through this method also, you find that in almost 80% of the occasions, the 5-year rolling returns have outperformed the benchmark. So clearly, whether you look at 5-year rolling returns, 10-year, 15-year, this particular benchmark has done well in the past versus the broad-based Nifty 500 TRI benchmark. And along with this return performance, I think it's important to look at the volatility. Does this return performance come with high volatility? And Ashokji mentioned that we are living in volatile times, but surprisingly, this return performance actually comes with lower volatility. So if you look at this chart over here, you'll find whether you look at 10-year returns or whether you look at 15-year returns in terms of volatility. While the returns are higher, but the volatility is lower. So 14.6% returns point to point with volatility of 17.1, which is lower than the benchmark. Similarly, if you look at a 15-year CAGR, you'll find that the returns are higher and the volatility is lower. So that further adds to the attractiveness of the portfolio because you're getting returns with lower volatility. And lastly, on volatility, we have seen how in volatile times of the last 15 years, जब मार्केट में बहुत शार्प करेक्शंस हुई हैं जैसे कि टेक बबल GFC crisis 15 years back, COVID very recently, and even the war uncertainty last year, over the last 2 decades, you'll find that whenever the market has corrected very sharply or collapsed, this particular benchmark has outperformed every time. And not just in major corrections, even when you have smaller corrections, this particular benchmark versus a broad index has given you a better upside downside capture ratio. What is this upside downside capture ratio? This indicates that if the market is going up, then how much percentage of the upside you capture. In this particular study, it's about 84%. And when the market is going down, do you capture the same downside as the upside? No, you capture less downside. It's about 65% in this study. So on the way up, you underperform, but you still capture 84% of the upside. And on the way down, you go down, but you go down much less than the broad market. So even in shorter durations of corrections versus compared to the these bigger corrections, this particular portfolio benchmark has a good track record. So overall, the return profile is attractive, the volatility is less, और जैसे कि मैंने कहा कि वॉलिटिलिटी चाहे आप ऐसे मेजर करिए या फिर आप करेक्शंस को देख के लार्ज करेक्शंस में देखिए कि ये मार्केट जब बहुत तेजी से गिरता है तो कितना आउट परफॉर्मेंस अंडर परफॉर्मेंस होता है और जब शॉर्टर करेक्शंस भी होते हैं तो इन ऑल दीज मेट्रिक्स यू सी लोअर वॉलिटिलिटी, good outperformance on the downside, and the return profile is attractive as well. So clearly a high quality performance, and since we have consistency in cash flows, longevity in terms of companies, visibility, life cycle, जो 70-80 साल पुरानी कंपनी है, many of them will continue for the next 70-80 years as well in India. So how are we going to build the portfolio? Coming to the third question. So in the HDFC MNC fund, what will be the portfolio strategy? Clearly, it's going to be a bottom-up approach to portfolio construction. And the core of portfolio hoga, which will be more than 80% of the portfolio, will be of MNCs as per the definition, and we are following the following definition. All companies having foreign promoter holding more than 50%, or any companies which are part of the Nifty MNC index or some other index which it comes in the future. And this product will follow a focus style, which means maximum of 30 stocks, a considered style, and while the benchmark will be Nifty MNC TRI, this will follow a benchmark agnostic approach and focus more on bottom of stock picking. And as far as the market cap is concerned, isme you'll find a multi-cap strategy. Large cap range would be about 50 to 90%, and mid and small cap range would be about 10 to 50%. And over and above the 80%, for the remaining 20%, there will be flexibility to invest anywhere else, like is the case with other thematic products. But we will have a focus more towards companies which are, Indian MNCs exporting abroad, or certain other companies in which the foreign shareholding may be less than 51%, and they're acting as franchisee of foreign companies. So the bias will remain towards the MNCs across the portfolio. So where all will we invest in? If you look at the top down, what is the investable universe? This page summarizes that. So there are about 30 companies in the Nifty MNC index, and there are 54 MNCs in the Nifty 500. And if I look beyond Nifty 500, there are many other smaller cap MNCs which have potential to become mid caps over the next 5, 7, 8 years, and they are found in this bucket. So our focus will be in stock picking across all these three buckets and try to create a focused portfolio of about max 30 stocks. This just gives you a flavor in terms of the composition, large cap, mid cap, small cap mix क्या होता है benchmark में. तो आप अगर पिछले 4 साल देखेंगे तो you'll see in about 30 names, usually 10 to 13 large caps रहे हैं and बाकी mid caps ही रहे हैं, and small cap benchmark में कम है, but like I shared with you, in terms of the opportunities to invest, there are a lot of MNCs eligible outside the Nifty 500 as well. So this is a top-down universe, and this is the benchmark composition, and this will be the portfolio strategy in short. Lastly, I'll end and open it up for Q&A, and on that, I'll like to answer the question as to why now, and why this is a good product to invest now, and what kind of suitability it has for the investors. So I would like to say, I think at the outset, we're not trying to time this product due to the macro environment. It is a good product. It is a high quality product. And the best thing which offers, the best thing which this portfolio offers, which this product offers is diversification. Why diversification? Because like I mentioned, the MNC portfolio has certain very unique characteristics of quality, consistency, longevity. And if you look at the overlaps this portfolio has, Nifty 500 or Nifty 50, which are the broad-based benchmarks, and around which all the main category products in the industry are structured around. It has very low overlap with those benchmarks. So for someone who's interested in diversifying his portfolio away from many of these products which are linked to the traditional benchmarks, a 5-10% allocation kind of a thinking thought process is something which can be used for this kind of a product. So diversification is something which it offers. And thirdly, like I mentioned to you before, it has a defensive character. So it's got defensive nature bhi hai, and which is what helps in cushioning the performance in volatile times. So therefore, I think because of these advantages, we would encourage you to have a look at this product. Please think of this as a diversification product, and we are encouraging people to have an investment horizon of at least 3 years. It can be an SIP product as well, and a buy and hold product too.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.